Something extraordinary just happened in the silver market, and I'm not talking about a normal price move. I'm talking about the kind of breakout that happens maybe once or twice in a generation, the kind that changes everything. Silver just shattered its all-time high. We're talking about a record that stood for decades, suddenly obliterated in a matter of weeks. The metal that was trading around $29 at the start of this year has exploded past $66 per ounce. That's a gain of over 120% in less than 12 months. Let me put that in perspective. Gold, which everyone's been watching, is up about 64% this year. That's an incredible move for gold. But silver? Silver has nearly doubled that performance. This isn't just outperformance. This is silver breaking free from every constraint that's held it back for years. And here's what nobody's talking about. This might just be the beginning. You see, when silver moves like this, it's not random. It's not speculation. It's not some Reddit forum pumping a meme stock. This is the market screaming that something fundamental has changed. And when you dig into what's actually happening beneath the surface, the picture that emerges is absolutely stunning. Let me take you back to understand why this moment is so significant. Silver hit its previous all-time high back in 1980. We're talking about 45 years ago. That peak came during a period of extreme inflation, geopolitical chaos, and a complete loss of faith in paper currencies. The Hunt brothers tried to corner the silver market. Interest rates were in double digits. The world was in turmoil. Silver touched $50 an ounce and then collapsed. For decades, that level became this mythical ceiling. Silver would rally, get close, and then get smashed back down. It happened in 2011 when silver briefly touched $49 before getting crushed. Traders started calling $50 the graveyard for silver bulls. But something changed this year. Silver didn't just approach that old high. It blew right through it like it wasn't even there. $66 and climbing? And the way it happened tells you everything you need to know about what's coming next. The breakout wasn't driven by speculators or momentum traders. It was driven by something far more powerful. A structural supply deficit that's now in its 5th consecutive year. Think about what that means. For 5 straight years, the world has consumed more silver than it produces. Every single year, we're drawing down existing stockpiles just to meet demand. And those stockpiles? They're getting dangerously low. The numbers are staggering. Global silver inventories have been shrinking at an accelerating rate. COMEX warehouses, which hold silver for the futures market, have seen their registered inventory, the silver actually available for delivery, drop to levels that would have been unthinkable just a few years ago. We're talking about inventory levels that can barely cover a few days of trading volume. And it's not just COMEX. The London Bullion Market Association, which oversees the physical silver market in London, has seen similar drawdowns. Silver is leaving the vaults, and it's not coming back. Where's it going? That's the fascinating part. It's going into industrial applications that are absolutely exploding. And unlike gold, which is primarily a monetary metal and a store of value, silver is being consumed. It's being used up in ways that make it impossible to recover. The biggest driver? The artificial intelligence revolution and the green energy transition. These aren't buzzwords. These are massive industrial shifts that require enormous amounts of silver. Every AI data center being built right now is packed with silver. The servers, the cooling systems, the power infrastructure. All of it requires silver for electrical conductivity. And we're not talking about a few data centers. We're talking about a global build-out that's unprecedented in scale. Then there's solar panels. Silver is essential for solar panel production. You can't make an efficient solar panel without it. And governments around the world are mandating massive increases in solar capacity. China alone is installing solar capacity at a rate that would have seemed impossible just 5 years ago. Europe is racing to reduce dependence on Russian energy. The United States is pouring hundreds of billions into green energy infrastructure. Every single solar panel requires silver. And as solar installations accelerate, silver consumption accelerates with it. Electric vehicles are another massive source of demand. EVs use significantly more silver than traditional cars. The electrical systems, the battery management, the charging infrastructure, all of it requires silver. And EV adoption is accelerating globally. Then there's 5G infrastructure. The rollout of 5G networks requires massive amounts of silver for the electrical components in base stations and devices. This is a multi-year build-out that's still in early stages. Add it all up, and you have industrial demand for silver. That's growing at double-digit rates while mine supply is essentially flat. The math doesn't work. Something has to give. And what's giving is the price. But here's where it gets really interesting. The supply side of the equation is even more constrained than most people realize. Silver isn't typically mined on its own. About 70% of silver production comes as a byproduct of mining other metals, primarily copper, lead, and zinc. That means silver supply is largely dependent on the economics of those other metals. If copper prices are low, copper mines shut down or reduce production. And when they do, silver production drops as a byproduct. Silver miners can't just ramp up production in response to higher silver prices because most silver isn't coming from primary silver mines. This creates a unique situation where silver demand can surge, prices can spike, and supply still can't respond. It's a recipe for explosive price moves. And we're seeing exactly that play out right now. Mine production has been essentially flat for years despite rising prices. New silver mines take years to develop and bring online. There's no quick supply response coming. Meanwhile, above-ground stockpiles that could buffer the supply deficit are being depleted, and once that silver goes into industrial applications, it's gone. You're not going to recover the silver from a solar panel or an AI server. It's consumed. This is fundamentally different from gold. When gold prices rise, gold doesn't disappear. It changes hands. It gets melted down and recast, but it stays in the system. Silver gets used up and vanishes from the available supply. Now, let's talk about what's happening in the investment world, because this is where things get really explosive. For years, silver was ignored by institutional investors. It was too small, too volatile, too industrial. Big money stayed away. But that's changing rapidly. Silver ETFs have seen massive inflows this year. We're talking about billions of dollars flooding into silver investment products. Retail investors are buying physical silver at rates that are straining dealer inventories. Premiums on physical silver coins and bars have spiked because demand is so intense. But the really big story is what's happening with central banks and sovereign wealth funds. These are the players with truly massive capital. And they're starting to pay attention to silver in ways they haven't in decades. Central banks have been buying gold at record rates for years now. They're diversifying away from dollar reserves and into hard assets. But gold has already run significantly. Silver, despite its recent surge, is still historically cheap relative to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been compressing. It's moved from over 90 ounces of silver per ounce of gold down to around 40. But historically, that ratio has averaged much lower, around 15-1 in ancient times and around 50-1 in modern markets. If that ratio continues to compress toward historical norms and gold continues rising, the math on silver becomes absolutely explosive. We're talking about potential moves that would take silver well into triple digits. And here's something most people don't understand about silver markets. They're tiny compared to gold. The entire global silver market is a fraction of the size of the gold market. That means when big money starts flowing into silver, the price impact is magnified enormously. $1 billion flowing into gold barely moves the needle. $1 billion flowing into silver can move the market significantly. And we're starting to see that kind of money show interest. Now, I want to take a quick aside here because this is relevant if you're thinking about your own financial security. If you're sitting on $100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It covers how you can get physical precious metals into your retirement account without triggering tax penalties. It's in the description below. Worth checking out if that's relevant to your situation. All right, back to what's happening in the silver market and where this is headed next. The technical picture on silver is absolutely screaming bullish. When you break out of a multi-decade consolidation pattern the way silver just did, the implications are enormous. Technical analysts look at these long-term patterns and calculate price targets based on the width of the pattern and the breakout point. Using those measurements, the minimum price objectives for silver are well above $100 per ounce. Some technical analysts are calling for targets of $150 or even $200. Now, those numbers might sound crazy, but remember, we're talking about a metal that's up over 120% in less than a year. The momentum is already there. The question is whether it can sustain. And when you look at the fundamental drivers, the case for sustained momentum is incredibly strong. The supply deficit isn't going away. If anything, it's getting worse. Industrial demand continues to accelerate. Investment demand is just starting to wake up. And the macro environment is increasingly favorable for hard assets. Let's talk about that macro environment for a moment, because it's critical to understanding why silver is moving now and why it could go much higher. We're living through a period of unprecedented monetary expansion. Central banks around the world have printed trillions of dollars, euros, yen, yuan, you name it. That money has to go somewhere. And increasingly, it's flowing into hard assets that can't be printed. Inflation, despite what official statistics say, is a real and persistent problem. Anyone who buys groceries or pays rent knows this. The purchasing power of paper currencies is eroding, and people are looking for ways to preserve wealth. Geopolitical tensions are escalating. We're seeing a fracturing of the global order that's existed since World War II. Trade wars, actual wars, sanctions, de-dollarization efforts by BRICS nations, all of this creates uncertainty, and uncertainty drives demand for tangible assets. The BRICS nations, Brazil, Russia, India, China, and South Africa, along with new members, are actively working to reduce dependence on the US dollar. They're settling trade in local currencies. They're accumulating gold. And increasingly, they're looking at silver as an undervalued monetary metal. China, in particular, has been a massive accumulator of silver. Chinese demand for silver, both industrial and investment, has been growing at extraordinary rates. And China has the financial firepower to move markets when it decides to act. Then there's the situation with the US dollar. The dollar has been the world's reserve currency for decades, but that status is being challenged in ways it hasn't been since the Bretton Woods system collapsed in 1971. When Bretton Woods collapsed and Nixon closed the gold window, gold and silver both went on historic runs. Gold went from $35 to over $800. Silver went from under $2 to $50. We're talking about moves of 20 to 30 times in less than a decade. Could we see something similar now? The parallels are striking. Massive monetary expansion, geopolitical upheaval, loss of faith in paper currencies, and a scramble for hard assets. The difference this time is that silver has this massive industrial demand component that didn't exist in the 1970s. The technological applications for silver have exploded. That creates a floor under silver demand that's much stronger than it was 50 years ago. And here's something that should terrify anyone short silver or holding paper silver contracts. The disconnect between paper silver and physical silver is growing. The futures market, where most silver trading happens, is primarily a paper market. Contracts are traded, but very little physical silver actually changes hands. Most contracts are settled in cash, not metal. But when you have a structural supply deficit and shrinking inventories, that paper market becomes increasingly unstable. What happens when contract holders start demanding physical delivery and there isn't enough metal to deliver? We've already seen stress in the system. There have been delivery delays. Premiums on physical silver have spiked relative to paper prices. The spread between what you can buy physical silver for and what the futures price says silver is worth has widened significantly. This is a sign that the paper market is losing its grip on price discovery. And when that happens, prices can move violently higher as the market reprices to reflect physical reality rather than paper promises. There's a term for this, a short squeeze. And silver is uniquely vulnerable to squeezes because of how the market is structured. Large commercial banks and institutions hold massive short positions in silver futures. They've been using these positions to manage risk and, some would argue, to suppress prices. But when prices start moving against those short positions, those institutions have to either deliver physical metal or buy back their contracts at higher prices. If they can't deliver physical metal because inventories are depleted, they have to buy back contracts. And that buying creates more upward pressure on prices, which forces more short covering, which creates more buying. It's a feedback loop that can send prices parabolic. We saw a glimpse of this during the 2011 silver spike. We saw it again during the Reddit-driven silver squeeze attempt in 2021. But those were primarily driven by speculative buying. What's happening now is different. This is driven by fundamental supply and demand imbalances, and that makes it far more dangerous for anyone on the wrong side of the trade. Now let's talk about what this means for different types of investors and what the implications are going forward. If you're a retiree or near retirement, the silver story is about wealth preservation in an environment where paper currencies are losing value. Silver, like gold, is a tangible asset that's held value for thousands of years. But silver has the added benefit of being more affordable and having explosive upside potential. A modest allocation to physical silver can provide portfolio insurance against currency debasement and financial system instability. And if silver continues its run toward triple digits, that allocation could significantly enhance overall portfolio returns. If you're a younger investor focused on growth, silver offers asymmetric upside. The risk-reward profile is compelling. Yes, silver is volatile, but the potential returns if this bull market continues could be extraordinary. For industrial companies that use silver, this price surge is a major concern. Higher silver prices mean higher input costs. Some companies are scrambling to secure long-term supply contracts. Others are looking at substitution, though for many applications, there is no good substitute for silver. This industrial scramble for supply is another factor that could drive prices higher. When companies start panic buying to secure inventory, it removes supply from the market and creates additional upward pressure. For mining companies, particularly primary silver miners, this is a golden age. Companies that can produce silver at costs well below current prices are printing money. Their profit margins are exploding, and their stock prices are starting to reflect that. Though many silver mining stocks are still undervalued relative to the metal price, there's a historical pattern where silver mining stocks leverage the move in the underlying metal. If silver doubles, silver mining stocks can go up 5 or 10 times. We're starting to see that leverage play out, but it's still early. Now, what about the risks? Because there are always risks, and it's important to understand them. The biggest risk to the silver bull case is a major global recession or deflationary collapse. In that scenario, industrial demand for silver could crater. If AI data center build-outs slow, if solar installations decline, if EV production drops, silver demand takes a hit. However, even in that scenario, investment demand for silver as a safe haven could offset some of the industrial demand decline, and the supply deficit would likely persist because mine production would also decline in a recession. Another risk is government intervention. If silver prices spike too high too fast, governments could potentially intervene in markets, impose export restrictions, or take other actions to try to control prices. This has happened historically with other commodities. There's also the risk of a major new silver discovery or a technological breakthrough that dramatically increases supply. But given the long lead times for mine development and the current state of exploration, this seems unlikely in the near term. The final risk is simply volatility. Silver is notoriously volatile. It can drop 20 or 30% in a matter of weeks, even in a bull market. Anyone investing in silver needs to be prepared for that volatility and have the stomach to ride it out. But here's the thing about volatility. It cuts both ways. Yes, silver can drop sharply, but it can also spike sharply. And in a supply-constrained market with accelerating demand, the bias is toward upside volatility. So where does silver go from here? Let's look at the potential scenarios. The conservative case is that silver consolidates around current levels, builds a base, and then continues grinding higher over the next few years. In this scenario, silver reaches $100 within the next 12 to 24 months and potentially moves toward $150 over a longer time frame. The moderate bull case is that silver continues its current momentum, breaks through $75 in the near term, and makes a run at $100 within the next 6 to 12 months. From there, it could consolidate or continue higher depending on how the fundamental drivers evolve. The aggressive bull case, and this is where things get really interesting, is that we're in the early stages of a parabolic move similar to what we saw in the late 70s and early 80s. In that scenario, silver could reach $150 to $200 or even higher within the next year or two. Which scenario plays out depends on several factors. How quickly does industrial demand continue to grow? Do investment flows into silver accelerate? How do central banks and sovereign wealth funds respond? What happens with the dollar and broader currency markets? But here's what we know for certain. The fundamentals supporting higher silver prices are stronger than they've been in decades. The supply deficit is real and growing. Industrial demand is accelerating. Investment demand is waking up. And the macro environment is increasingly favorable for hard assets. The breakout above the old all-time high is technically significant. It suggests that silver has entered a new phase, one where the old resistance levels no longer apply. The market is repricing silver based on new realities, and those new realities are compelling. We're living through a technological revolution that requires massive amounts of silver. We're living through a monetary crisis where faith in paper currencies is eroding. We're living through a geopolitical realignment where nations are scrambling for hard assets. All of these forces are converging to create what could be one of the great bull markets in silver. The kind of move that happens once in a generation. The kind that creates life-changing wealth for those positioned correctly. The chains that held silver down for decades, the paper market manipulation, the industrial price suppression, the lack of investment interest, those chains are breaking. And when silver breaks free, the moves can be explosive. We're watching history unfold in real time. The question isn't whether silver will continue higher. The question is how high it goes and how fast it gets there. Because when you have a structural supply deficit, accelerating demand, and a market that's been suppressed for decades suddenly breaking out, the potential is enormous. This is the kind of opportunity that doesn't come around often. And for those paying attention, for those who understand what's really happening beneath the surface, this could be the trade of a lifetime. Silver just broke out of its chains, and the historic run that's beginning could reshape the precious metals landscape for years to come.